Hello and welcome to another update video about ETH. So also ETH now, in line with my last video update yesterday, is following through to the downside. And due to that sort of fake out that we had on Thursday overnight, we were watching for at least another low here. I mentioned yesterday in the last video, one more low could give us 5 down. We'll take a look at that now. Why are 5 waves down important? Well, because if we count this here still as this endless wave 4 range that we've been talking about already more than a week, we've been moving in this range now, then this was a high B wave, which is corrective, and the C wave down is either a diagonal pattern or an impulse. And it's hard to identify the sub wave structure. We're going to give it a go, but important to understand is that this is likely just a correction with an overshooting B wave. We're coming down in wave C. And the support levels remain relevant, okay? The support levels remain relevant, really nothing changed. In the end, the price has sort of just behaved how you would typically expect it in a wave 4, which means you have a few fake outs, you have overshooting B waves. The triangles that I mentioned to you, they transformed also on the Bitcoin chart to something else, which is, I said, you know, this is something we need to be watching out for. It regularly happens. There's no way to predict it, but we can be prepared for it. And so, yeah, I mean, that price action at the moment is just pulling back again into support. Ideally, because this wave count or this structure is now technically very full, as we would say, the next breakout attempt could indeed be successful. But first of all, we need to complete this current correction to understand that we head back into an uptrend in wave 5 of 3. Here on the Ether chart, it's a bit different to Bitcoin. I'm actually watching for only one more high in wave 3. Then a 4 and a 5, whereas Bitcoin, well, I'm watching for 2, one more extension in wave 3, then a 4 and a 5, whereas in the Bitcoin chart, we're already in this wave 4. That could happen if we break below 1724. Then I will assume also here we're in the larger degree 4th wave. But for now, we focus on what's in front of us. And yeah, this could be an A wave, this could be a B wave, and we're now coming down in wave C. Wave count, again, micro counting, extremely unreliable. 1, 2, possibly here the 3, 4. Wave 5 might unfold as an ending diagonal in 5 waves itself. And what we can do is, to understand target for wave 5, we take the length of wave 1, then we go to the high of the wave 4, and it gives us the basically 1760, the 1-to-1 ratio. Is at least a level to watch. It's in this kind of wave degree really not reliable. Sorry, really not reliable, but still pay attention to it because we have technically 5 waves complete in a wave C, which is what we want basically, okay? At least it means we have to be watching for reversal here somewhere from the box anyway. I mean, the parameters haven't changed in over a week, okay? So we were very much prepared for all these parameters. They guide our structure. And the support levels haven't changed. Also, beyond what I just told you, beyond that level, we can look at the Fibonacci extensions. So we take the length of the wave A, go to the high of the B, and then further levels to watch. First of all, 1772. That's the 1-to-1 ratio, could also be interesting. Then here, 1755, of course. And another key level is around 1710. The 1.618 extension is just below 1724, but it would not be a sustained break, and it is within this support area. So really, as I said, only below 1671, I will have to take a more bearish perspective on ETH. But these are the key Fibonacci extension levels to watch. Essentially, we just need to be a bit patient and wait for the first turnaround again. Important to understand that this ABC could turn into a more complex WXY structure, which they like to do in crypto. Again, a typical character trait within a 4th wave. So it's not predictable, but we can prepare for it. So this would be a WX because both have 3 waves, and then a move down in a Y wave. And in the Y wave, then we would have here an A wave down instead of all of wave C. We would get a B wave instead of wave 5 and then come down once more, but then start a rally, okay? So that means after the next low, which could, to be honest, with 5 waves complete nearly or complete shortly, if the next rally is corrective again, okay, and doesn't break above resistance, which I will highlight then at the time, then this could come down deeper into support again. Wouldn't be bearish, would just again mean, okay, we have to be more patient and stuff like that. Ideally, I'd like to see a breakout to the upside today, just because otherwise the weekend will be boring. Even though we had a few turbulent couple of weeks, I don't mind a boring weekend. But anyway, the last few weekends were actually quite exciting. So that can always happen. So yeah, there's not much more to add. I think the parameters are very well defined. Everybody should know them. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.